Hi, I'm Anthony Homan, Head of ETF Products here at S&P Capital IQ, and today I'm joined by Todd Rosenbluth, Director of ETF Research. Today is a big day for us at S&P Capital IQ and for the ETF industry as a whole. For the past 4 years, S&P Capital IQ has provided rankings on equity ETFs with a holdings-based approach using proprietary and well-established tools such as the S&P Stars and S&P Quality Ranks. We now cover 780 equity ETFs, including many that have less than a 3-year history. And today we are adding over 170 fixed income ETFs to our universe. Todd, thank you for joining me today.
Thanks.
Why do you think investors now need rankings on fixed income ETFs more than ever?
Well, the industry has continued to evolve. So we now have, as you mentioned, 170 that we'd have under coverage. 90 of them have less than a 3-year track record. We've seen money continuing to move into fixed income ETFs, but not just traditional ones, the well-diversified ones. We've seen money moving into short-term focus. We've seen money moving into high-yield focus. And you've got to understand the differences between them from a risk-reward standpoint.
How do you look at an ETF's yield relative to its credit rating, especially with respect to the holdings?
Yeah, so typically the higher the yield, the worse the credit rating or the worse the duration characteristics from a risk standpoint. So we balance those two factors out. So a high yield bond ETF is going to get ranked favorably for its yield characteristics, but unfavorably for its credit quality perspective. Whereas a short-term treasury ETF is going to have a lower yield, it's going to get scored less on that yield factor, but score better from a short duration. So we really think you got to weigh those factors together, and we really believe that S&P Capital IQ, this is differentiated research from our competition.
What else should investors look at the ETF level?
So besides the underlying holdings, it's important, of course, to know about the expense ratio, how that compares to other alternatives, the bid-ask spread. The tighter the bid-ask spread, the better. That means you're typically paying less money for that ETF. You also want to understand the liquidity at the ETF level. Lots of money most of the money is focused on the largest of the ETFs in the universe. So if you're taking on risk, if you're investing in one of those less liquid ETFs, we think all these factors should be part of a ranking instead of just looking at a 3-year track record that some of those in the industry are doing.
And the ranking itself is phenomenal. What else can investors find on the research reports besides the overall ranking?
Yeah, so besides the ranking, you can also look at the underlying holdings from a sector level. If it's a corporate bond, how much is in consumer discretionary versus technology versus consumer staples. We've rolled up the underlying issues to an issuer level, so you can find out who are the top 5 issuers that are there. And we're also providing some more top-down outlook as to what's going on in the fixed income universe, in the investment grade, in the high yield space, as well as in the government treasury side of things. All those things we think can help investors as they navigate through this more challenging fixed income environment.
Thanks, Todd. And thanks to you for joining in. The new fixed income ETF rankings and reports can be found along with the current equity ETF reports on MarketScope Advisor. Our research can also be found on platforms of some of our other wealth partners and self-directed sites. To learn more about our research and where to find it, log on to getmarketscope.com.